Hello, listeners, and welcome to a bonus episode of Tell Me More, a hospitality data podcast recorded at the 2026 America's Lodging Investment Summit. On this bonus episode, you'll hear CoStar News Hotel's Natalie Harms with STR's Isaac Collazo. CoStar's Jan Freitag, the other half of the Tell Me More duo, was stuck in Nashville because of weather. Enjoy the episode, and thanks for listening.
Hi, I'm Natalie Harms, reporter for CoStar News Hotels, and I'm here with STR's Isaac Collazo, and we're going to unpack the recent forecast a little bit, talk about some of the takeaways from Alice so far. So, let's actually start with, what's the vibe at Alice for you? I know you're a regular, so I'm wondering what your thoughts are.
Well, that's a great question, Natalie. I think the vibe is somewhat optimistic. And so, again, it's a weird vibe because, again, the winter storm kept so many people away. So it is oddly weird because people are talking about the weather and how hard it was to get here. But then when we start talking about the industry, there is more positive attitudes out there, even though everyone agrees that nothing is dramatically changing in the environment, both economically or politically. But yeah, overall, I feel a little bit more optimistic. And some of it is because we believe the worst is behind us, right? Because we've lived through the shocks of the tariffs, we lived through the changes in travel policies and things of that sort, including DOGE and all that. So I think that's why. I think people are just saying, okay, maybe this will be a little bit easier than last year.
Yeah, well, it is really funny that we're all talking about the winter storm when it's sunny and beautiful here in California.
It is beautiful.
I feel a
here.
little guilty. Okay, so before we talk about the 2026 forecast, let's look back at 2025. And we know we all lived it, but what are those key takeaways we should bring into the new year?
Key takeaways is that we've seen for the first time in a non-recessionary period 3 quarters of declining RevPAR, right? And we're looking, actually we'll see probably a fourth quarter in the first quarter of this year. And that's very different. We've never been in an environment where RevPAR had declined when GDP is actually positive. So that's the first part I would think about. I also thought the decline in group was something that we didn't expect. We thought group would be very strong this year, and it didn't. It actually fell. And of course, the international travel piece, when we were expecting international travel to increase, and it actually decreased. And so those are kind of the highlights for me. Overall, demand falling, that's very different. Another piece that I think is interesting on the demand side is that if you look at total accommodations, and by total accommodations, I mean you add hotel demand and short-term rental demand. Total accommodation demand was up 6 million room nights, but all of that was short-term rentals because room demand for hotels actually fell.
Okay.
So that takeaway for me is people have not lost the desire to travel, but because of the higher cost of living, people are making different choices. And I think that's a big insight that we have to really internalize as an industry. What can we do? Because again, people are traveling. Air travel was up last year. Now I told you total accommodations were up. Oh, and along with that, cruises are up. So again, it's just the hotel industry that seems to be very soft at this point. And I think that's the insight.
Yeah, so factoring all of that in, you released the hotel forecast here at Alice. Tiny changes, nothing too dramatic from what was previously forecast. But what are the highlights for that report?
The highlight is it's more of the same, right? And that's how I keep phrasing it. Yes, we tweaked it just a bit, but it's nothing that different from what we released a quarter ago. And it's because, again, economically, politically, nothing's changed. Why would you expect it to be different at this point? Now, there are some implications, right? We do know there are some headwinds in the first quarter. I kind of alluded to that earlier, and that's because of the hurricane markets. And the hurricane markets from 2024 will still impact the U.S. Demand and RevPAR in the first quarter, and then start waning by the second quarter. So by the time we get to the third quarter, it's it's gone. We also have the inauguration impact from last year, especially in January. We have some minor impact from the LA fires a year ago. So all that's in the first quarter. That's what's really going to impact that first quarter results. Thereafter, it really starts changing, and then you have the World Cup, and then you have all the 250th anniversary celebrations for the United States. So I think there are some other drivers there that will then change the outlook and make it feel more positive. But overall, nothing is different. I mean, it's pretty much the same except for things I just mentioned. So you could argue that it is different, but it really isn't. It's easier comparables, I think.
I think, and the way I kind of see it is 2026 is a tale of two halves. Like we have the first half and the second half, as you just explained, very different. And it gives us a positive spin, right? That, the second half is going to be better.
Yeah, it's going to be better because, again, you're losing some of that headwind and then you have the tailwinds. And then, again, and I also feel that travelers are starting they're not shocked anymore. We had the shocks a year ago. Now it's like, we just got to get on with our lives, right? And there are things to still be happy about. There's still reasons to travel. And I think that's also kind of lifts that second half, especially with the World Cup. And the World Cup, should be significant. All the analysis we did from the 1994 World Cup when it was held in the U.S. was that it's an ADR event. And it's easy to think about that because it is people who tends to be on the higher income levels that'll come into the U.S. And we think those individuals, regardless of our travel policies of the United States, will still have the means, have the know-how, and they will make it to the World Cup, and that will lift the ADRs. And just thinking of the World Cup, we mentioned on stage yesterday at Alice that if you take out, there's 11 cities, let me rephrase that. If you take out, there's 11 cities that are hosting the World Cup. 10 of those are top 25. But to really understand the strength of those 10 markets, if you back those markets out, then you would have U.S. RevPAR negative for 2026. But again, those 10 markets are some of the best markets in the U.S., New York, San Francisco. So even though they have the World Cup, they're still significant markets. And even Philadelphia, we think, is going to really do well this year because of the anniversary of the U.S., along with the World Cup. They also have the All-Star Game. I mean, they have so many events coming in that's a market to watch, and that'll be a very positive market.
Yeah. Well, I'm going to set you up for another positive spin on 2026. We've done some reporting on this. I know you mentioned it on the stage yesterday. There are some calendar shifts happening in 2026 that are in favor of hoteliers, right?
Yeah, holidays are first. Let's talk about Valentine's. If you have not made your reservations, forget about it.
You probably can't,
Yes, because it falls on a Saturday, which is the best day for Valentine's for the hotel industry to fall on. Plus, it's the President's weekend, right? President's Day weekend. So that's going to be a mega first test of the positive shift in holidays. And then you have multiple other holidays. You have 4th of July, which becomes a real 3-day weekend. Then you even go all the way down to the Christmas and New Year's. It's also in much favorable spot. So that's the holidays. Then you have the calendar shifts. For those of you, sometimes a month will end on a Sunday, which is bad for the hotel industries. But if it ends on a Saturday, it's good for the hotel industry. Well, this year we have more positive calendar shifts than we do have negative ones. So again, that alone, I think it was 6 to 5. So no, it couldn't be 6 to 5. Yeah, there was 6 to 5 because there was 1 month where there was no shift at all. So it's 6 positive, 5 versus negative. Just that alone is a good thing. So I think, again, overall, calendar shifts our favor. So that gives us a tailwind, along with all the events happening that should be positive.
Yeah, well, let's talk a little bit about supply, because I know that changed slightly in the new forecast, and which probably shouldn't surprise anybody.
Yeah.
But, what should hoteliers keep an eye on in terms of pipeline?
I would a couple things in the pipeline. In 2024, the pipeline itself, the total pipeline, which includes under construction, final planning, and planning, was at an all-time high. I'd never seen so many projects before. It ended 2025 just below the all-time high. So it still, to me, signifies optimism in this industry because people are still signing deals and they want to build. The issue is getting to that under construction stage. And that's because the interest environment, the capital markets, everything are still not favorable. It's still very expensive to build in the industry. So what we're seeing right now is that only 19% of the hotels in the pipeline are actually under construction. What's significant about that? That's not an all-time low, but that's the lowest since 2011. So again, People are optimistic, but they simply don't want to. They just either can't or are holding to really start moving dirt again. And in terms of openings, what we've seen in 25 and even 24 and 23, we're opening about 750 hotels a year. That's well below the 20-year average, and we did the 20-year average from ending in 2019. So normally we're opening about 1,000 hotels. So yeah, you're just not seeing that movement of openings. And what we are starting to see that picked up was conversions. Conversions had been below the 20-year average, and in 2025, it actually rose above the 20-year average and was the highest since 2016. And what was significant there is we saw more independent properties go to branded properties. And again, there were still some brands going to independent, a lot of movement, but the largest group of hotels that converted were that independent to brand. So I think, nothing changing in supply. We still think it stays below 1% for the next 2 years. It's because, again, until it becomes more favorable, and favorable is not only interest rates, as I said, but just the construction cost, even availability of stuff because of the tariffs and that cost, it's just taking a long time.
Yeah. Well, I know we have most of 2026 to live, but we have, seen some 2027 forecasts. How should hoteliers think of 2027 at this point?
We're more optimistic in 2027, but it's a long way away, right? So I wouldn't put so much stock in the 2027 forecast yet. And again, when we say optimistic, it's not like it's that. We're not talking 2, 3, 4, 5% RevPAR growth, right? Just incrementally better. But we think some of the headwinds, not tailwinds, but the headwinds that are holding back people will start dissipating a bit. And even economically, we should be more stable. And people, again, hopefully the cost of living will have come down. So then you start opening travel, at least the expenditures for hotels become more affordable, not affordable, but attainable for lower and middle income individuals who may have been holding back. And maybe those are the individuals I think have been going to short-term rentals because they can share that cost. So as cost of living comes down, economy gets more firm again, then hopefully that becomes that driver for a better demand output for the industry, and then of course higher RevPAR.
Yeah, well, I love to ask people the question, what's keeping you up at night? So I'm going to phrase that to you. What are you most focused on? What are you keeping an eye on?
I keep an eye, you're going to laugh at this, on tweets. Tweets are the things I'm looking at because, as I said yesterday, we're one tweet away from a disaster. And so every morning, every night before I go to bed, I'm scanning the news for the Wall Street Journal, the New York Times, you name it, I'm looking at everything. What did I miss? Because it's that one comment that could change everything for the economy, the politics, you name it. It's just a comment can actually move markets. And as we've seen, someone told me, I was at dinner earlier this week, and they said that there's been a market moving comment like every day of the year so far. And I was like, oh my God, I never thought about it. And they may have been 25. And I was like, I haven't verified that, so don't take that to the bank. But I thought it seems possible. And it actually seems possible. So that's what keeps me up. It's that unknown. And in the past, you're pretty sure when you went to bed that nothing in the news was going to shock you when you woke up. Now you don't know when you wake up and you turn on your phone. If you're like me, the first thing I do is scan the news, which is probably a bad thing, but that's the first thing I do every morning. And that's what keeps me up. Is that when I go to bed going, oh God, what's going to happen today?
You are definitely not alone in keeping a close eye to see what happens. Well, Isaac, thank you so much for joining me today. Yeah, we've got to go enjoy the rest of Alice.
Yes, we do. And then beautiful weather.
I'm Terence Baker, News Editor, Europe, Middle East and Africa, and I'm the host of The Upgrade, a CoStar News Hotels podcast for the EMEA region. In it, I discuss with special guests the pressures, challenges, joys and exhilaration that comes with managing, owning and developing hotels in our glorious multifaceted industry. Discovering the EMEA region from the scenic northern shores of Norway to the heights of Table Mountain in South Africa, and most likely some chat about birdwatching, distance running and the English Premiership. Join us wherever you find your podcasts, on Apple Podcasts, on Spotify and on other platforms.
This special episode of Tell Me More, a hospitality data podcast, was recorded on January 27, 2026. It was recorded by Meredith Sheridan and edited for the podcast by Sean McCracken. Find all hotel industry news at costar.com/hotel news. Thanks for listening.